Rio Tinto, a 15% increase in the dividend as well. We saw Rio Tinto shares in London trade higher. Can we expect a similar response from investors here in Australia today?
Well, if we have a look at Rio Tinto shares, we have seen it beating expectations. The underlying earnings result came in at $9.303 billion. So that beat consensus by 2.5%, and that was also in the higher end of estimates. The estimates range from about $8.8 billion on the low side up to about just over $9.3 billion on the upside. So it is on the upper end of analyst expectations. It's beaten the market consensus. Also, if we have a look at the $14 billion worth of write-downs, we already knew that we would see write-downs of around about that size, but that was also offset by $1 billion worth of consolidation coming through from the Richard Bay Minerals project. So that was a positive there. And the dividend was a nice surprise. It really did beat on the upside, $1.67. That's up by 15%. And it shows that Rio Tinto is willing to align its business more to shareholders and creating wealth for shareholders. So that was a huge positive as well. If we have a look at the EBITDA margin, though, we did see margins decreasing down to 34% from 44% previously, but that's really not a surprise given that we have seen commodity prices decreasing, and that's the main reason because of that. Also, we've seen some positive commentary saying that the positive momentum in the fourth quarter has entered into 2013 and that China growth should recover back to above 8% in 2013. So that's a positive. One of the things we were watching was the aluminium business. It does look like Pacific Aluminium is ready for divestment. There's no timetable there, but I guess a number of options on the table at the moment, including an IPO, a trade sale, or a partial sale, or giving back some of the shares to Rio Tinto shareholders. So altogether, a pretty good result, although we did see a little bit of weakness in Rio Tinto shares in offshore markets. And remembering that Rio Tinto had an absolutely fantastic performance yesterday with a rise of 2.3% on the Australian share market ahead of these results.
Also a report today, Julia, in Fairfax Media on the ACCC launching an investigation into practices at Coles and Woolies following accusations the supermarket giants improperly forced down prices paid to suppliers. Do you think that this is going to have much of an impact on the shares in Wesfarmers today on the back of that result yesterday coming in a little bit better than expected?
I think this investigation may continue for a while. What's really driving Woolworths and Wesfarmers at the moment is the earnings momentum. And in Wesfarmers, the earnings momentum in Coles is extremely strong. We saw a strong result coming out of Wesfarmers yesterday, especially in that food and liquor space. So it is doing extremely well. And that's despite this very competitive environment where we are seeing a supermarket war between Woolworths as well as Coles. Not only that, we're seeing Aldi expanding into other states such as WA, so we're seeing increased competition from Aldi, which must be a bit of a headache for the big supermarkets as well. So it is a very difficult environment. This investigation, I don't think will have an immediate impact in terms of the shares. Really what's driving it is the food and liquor business at the moment, and here we are seeing Coles outperforming Woolworths, and Wesfarmers share price certainly did well yesterday.
And Julia, just to finish up, we've had a fantastic week on the market closing above that key psychological 5,000 level for the past two sessions. The SPI today, though, pointing to a weaker start after a pretty flat lead from Wall Street and weaker European markets at the close. Do you think we might see a bit of profit taking to round out the week today?
I wouldn't be surprised, Liz. It's been a fantastic run for the Australian market. In fact, we're on track for a weekly gain of 1.3% so far, and that would make it the fifth consecutive week of gains for the Australian share market, and it would mean that in the last 13 weeks we've seen 12 weeks of gains. So it's been a phenomenal run for the Aussie market. This week we've really seen the market being dominated by earnings season. We've seen our regional markets pretty quiet with the Chinese stock market closed for the Lunar New Year, but in Australia we've seen the industrial sector outperforming, up by 3.2%. And this has really been led by earnings results and some price momentum coming into stocks like Bradken, Leighton's, as well as Downer EDI, which have outperformed. If we have a look at the material space, it's also done well with a gain of 2.1%. And of course, the financial space doing well with those updates from CBA and NAB helping the sector. So the financial space up by 1.9%. On the flip side, though, we have seen the information technology sector coming under pressure. That was down by by 2.9%, and the healthcare space down by 1.9%. The leads from offshore were a little bit shaky. We did see the US with flat to mixed leads. Not a huge movement there, more consolidation, and there's not too much in terms of earnings today. We will hear from Charter Retail, Duet Group, as well as Perseus Mining, but it's not going to be a huge day in terms of earnings. So I think we will just see a bit of portfolio shuffling, maybe some lighter volumes coming through, but next week we are expecting to see earnings season ramp up on